Have you ever wondered how billionaires like Jeff Bezos, Elon Musk, or Warren Buffett can rake in billions and still pay less taxes than you? Well, they do it legally. And the real kicker? You can't just copy them unless you understand the rules of the game. In this video, we're diving deep into the legal tax avoidance strategies used by billionaires, from tax-free loans to trust loopholes, and offshore tactics that the average person rarely hears about. But here's the twist. None of this is illegal. So how do they do it? Why doesn't the IRS come knocking? And what tricks are hidden in plain sight that even accountants overlook? Stick around, because by the end of this video, you'll see money, wealth, and taxes through a completely new lens. And you'll realize the system isn't broken. It was built this way. The game isn't income, it's wealth. Most people focus on earning a salary. Billionaires focus on building wealth. There's a critical difference between income and asset appreciation. Let's say you earn $100,000 a year. You pay income tax on it. But let's say a billionaire's company grows by $1 billion in value. They don't pay any tax on that gain until they sell. And guess what? They rarely sell. Instead, billionaires borrow against their growing stock value. Imagine owning $10 billion in Amazon stock. Instead of selling and paying taxes, you walk into a bank and take a loan against your stock. Say $500 million. Interest rates? Dirt cheap. Taxes owed? Zero. This is called the buy, borrow, die strategy. Buy assets. Borrow money against their value. Die and pass them on to your heirs, often tax-free. Sounds unfair? Maybe. But it's perfectly legal. But wait, how do they avoid taxes after they die? Isn't inheritance taxed too? We'll get to that in a moment. Tax-free loans are the secret weapon. Loans are not considered income. That's the first secret. When billionaires take loans backed by assets, they avoid selling and thus avoid capital gains taxes. For example, let's say Elon Musk wants to buy a mansion or a yacht. He doesn't sell Tesla shares. He gets a low-interest loan using those shares as collateral. The result? He pays no income tax. He keeps his Tesla shares, which continue to grow. He writes off the loan interest as a business expense in some cases. And because he still technically owns those shares, he keeps control over his empire. In contrast, the average person sells assets and pays tax just to make a big purchase. This isn't cheating. This is playing the system with the rules built into it. And these banks? They're happy to hand out loans, because who wouldn't lend money to someone with billions in assets? But what happens when they die? Won't the IRS take its cut eventually? Not necessarily. In the next section, we'll expose the death trick that keeps the taxman away from billionaire estates. The step-up in basis trick. So here's the shocking part. When a billionaire dies, the taxes often disappear. Let's explain. Say a billionaire buys stock for $1 million. When they die, it's worth $100 million. Normally, if they sold, they'd owe taxes on $99 million. But if they hold onto it until death, their heirs get what's called a step-up in basis. That means the stock's original cost basis resets to its current value. So now, the heirs can sell it for $100 million and pay zero in capital gains. This is how generational wealth is passed on, without the IRS getting a dime. This rule, originally meant to protect small family farms and businesses, is now a legal loophole for the ultra-wealthy. And here's the kicker. Even if an estate tax applies, billionaires use trusts and foundations to shield it. How do trusts help avoid estate taxes? That's coming up next, and it's even more clever than you think. Dynasty trusts and foundations. Let's talk about trusts, the quiet kings of tax avoidance. Dynasty trusts are long-term legal structures designed to hold wealth across generations, sometimes indefinitely. Here's how it works. A billionaire puts $500 million into a trust. The trust grows and supports their children, grandchildren, and beyond. The assets are no longer owned personally, so they aren't hit with estate taxes. And because the trust is designed by the best legal minds, Income inside the trust is often taxed at lower rates or deferred entirely. Then there are foundations. Many billionaires set up nonprofits and donate to them. Yes, this can be altruistic, but there's also a tax advantage. They can deduct charitable donations, control the foundation as board members, hire family members, and in some cases invest through the foundation itself. The result? A blend of charity and control, where the billionaire shapes public image, reduces taxes, and still pulls the strings. Offshore accounts and shell companies. Now we're diving into the world of offshore finance. It's not all shady Swiss banks. Many billionaires use legal international structures to shield income. They set up shell companies in tax havens like the Cayman Islands, Luxembourg, or Bermuda, places with zero or very low corporate taxes. These companies own intellectual property, like trademarks or tech patents, license it back to the US company, then collect royalties offshore. The money never touches US soil and therefore escapes US taxation legally. One famous case? Apple moved profits through Ireland where taxes were minimal, saving billions in the process. And it's not just tech companies. Real estate empires, hedge funds, and even celebrities use similar structures. But remember, they hire entire legal teams to stay within the law. It's complicated, expensive, and very effective. Is this legal for you to do? Technically, yes, but there's a big catch, and we'll explain it in the final section. So now you know. Billionaires don't play by the same rules, yet because they helped write them. Through loans, trusts, offshore companies, and strategic donations, they legally avoid taxes while growing their fortunes exponentially. You might be thinking, can I do this too? Yes, but it takes wealth, lawyers, and financial architects most people can't afford. But understanding the system is the first step to beating it. Because if you don't know the rules, you're not even playing the game. If you found this video eye-opening, subscribe for more deep dives into the hidden mechanics of wealth, power, and the economy. Leave a comment below. Which trick surprised you the most? And remember, it's not about working harder, it's about knowing smarter. Thanks for watching.